Hi and welcome to the Market Alert for Tuesday the 27th of September 2022. So cable hits all-time low, sub 1.04 while bond rout extends. So the pound below 104 there. Kamikaze, debt and despair. The emergency measures from the Bank of England may now be inevitable. They won't happen, in my opinion, unless the pound goes back below yesterday's low. Pound tumbles after Bank of England issue brief toothless statement. And there you go, toothless statement. The Bank of England will make a full assessment at its next scheduled meeting. So we're talking weeks away of the impact on demand of inflation from the government's announcement and the fall in the sterling, and act accordingly. Well, I don't think they'll do it. And if you look at this headline here from Sky, pain for mortgage holders, investors bet Bank of England to raise rates even higher. We're talking about interest rates are now expected to rise 6% next year, far above the 1.5. They can't do it because, they can do it, but if they do it, then it will absolutely implode the housing market, which is the favourite thing of all of governments. The continuing rise in house prices that make people feel wealthy, and if they don't, then they're not going to get the votes. So we'll have to wait and see, but I can't see 6% next year for me. I may be completely wrong on that, and they'll do what they want to do, but it's a big ask, that is, from 1.5% of their to 6%. And the article goes on to explain why. By August, traders in the money markets were betting on rates hitting 2.75 next year. Then Liz Truss took office. The expected peak rose to 4.7 today in the wake of Friday's fiscal event, the mini budget. The expected peak rose to 6%. I did notice today as well that, and again, this is not unusual, if we just go to the main headline, mortgages withdrawn from sale as market reels after mini budget. Amazing that inflation's disappeared. It's all about the tax cuts now and the impact that it's going to have. It's just bizarre. Inflation is sort of sidelined and that's it. So again, you've got this, again, it's just rhetoric. Bank of England will not hesitate to change interest rates. On a day when we saw the pound plummet, they took no action. So why are they going to take action now the market is settled? And let's tell you what, let's have a look at the pound first off today. So there's the daily chart of the pound. You can see the market coming back up off the lows of 103. Let me just move that along there a bit so we can actually see the figure. 103.25, and you can see we're already trading at 107. We may be having a dead cat bounce before we come back and retest it, but it just seems very odd that yesterday, unless they came in and intervened in the market and brought the market back, which you'll see in the 30-minute chart. But that happened overnight. The low was there, and then, the market was brought back to the upside. It was supported, bit of a shake-off in the afternoon when the US dollar index opened, but really not a lot there to say that the pound is now crashing, to be honest with you, as long as the market holds above the DP. A lot of support through there yesterday. Then you can expect prices to move back to the upside. So let's just draw in some fibs to the upside, and you'll see we're just through 38, got 50 there. The high of this bar will be very important, and you've got the 5-bar moving average. Like I say, we could be seeing a dead cat bounce, and we could go back down and retest, but it just seems odd. Unless they intervened on the QT yesterday, the pound is pretty much stable there, as you can see overnight in the 30-minute chart. It's just moving to the upside, but we'll have to wait and see. But there doesn't seem to be any balls in the Bank of England or courage to move the rates to the upside on a day when you saw this sort of activity. Then you would have expected to, but they didn't. And it took until mid-afternoon before they made an announcement. As I said yesterday, they were likely to intervene and make some sort of a statement. I didn't realise they wouldn't have the courage to actually do it, though. But that doesn't mean to say they weren't doing it quietly. The GBP, JPY, also a lot of volume there for yesterday. The market brought off the lows, that 149.91. I think it's 91, isn't it? Yeah, 918. And in the 30-minute charts, you can see again all of the action taking place on the Asian market. And then as soon as we got the European markets kicking off, everything was brought back to the upside there. Moving on to the stock markets, the Dow, you can see there, low yesterday, market loving this coming off the low, but being pushed back down, but overnight prices moving back to the upside. Like I say, the low is very important for these markets, and you can see that yesterday when the Dow got down to the low, how they managed to bring the market off this level. So watch the low, the DP, and the high of the previous day. That's why these are in the chart. Also, the close is very important as well. But these areas represent great areas of where the market is likely to find some sort of support. So we see the market trading down to Friday's low. We rally up, we get a retracement of 89, and then we move back to the upside overnight. In the German DAX, we see the same thing yesterday. The DAX sitting on the low. We've got demand. We're oversold. We're trying to move back to the upside. Now I've marked up the upside. If the market holds above the low of yesterday, again, look at this. So it just sits on the low. We're oversold. We've got a crossover. We've got demand. And the German DAX moves to the upside. We then get an 89% retracement to the upside. Here, retracement, we then sell off and we get another retracement back to here, and then we move back up again off the low. So 3 times yesterday the DAX came down to the low, held at the low, was oversold. This one was just about oversold, and then moved to the upside. But you'll see the demand each time the market comes down to these levels. Then you've got your retracement, and then we move to the upside. And at the moment, we've got a bit of weakness in there. But again, as long as the DP holds the close, and if not, we get down to the low. Now, it'll be interesting to see if we have that weakness today, or we have a rally up first to yesterday's high when the futures market opens at 7 a.m. In the 5-minute chart, that's the 15-minute. Let's get the 5 minutes. In the 5-minute chart yesterday, market moved lower, down to the low. You can see inside of the action now as the market was oversold and then just sat sideways, retracing, waiting, and always bouncing it off the low. The market opened and they sent the market up 150 points plus. Then we retraced. We had an oversold market after being overbought, down to the 200 MA, got a crossover in the stochastics, back to 89% retracement, then overbought, and then we see the market moving all the way back down and testing the low of Friday. What was interesting here was the momentum was already starting to shift to the upside, so we went up, we shook out, got rid of the weak traders, and then brought the market back to the upside through the choppy part of the day. And then the Dow, where you can see there the market moving up initially, becoming overbought with supply and selling with the red bars, crossover, and then bringing the market back. And overnight prices have been trading sideways to the upside, above the DP and above the 200 MA. So stuck in a range at the moment, waiting for the DAX to open. Let's have a look at yesterday's trading profits. These are the profits for yesterday. I only managed to trade in the morning. I had to go out in the afternoon, but you'll see there 14289. Profit factor obviously very large there, 42.9, but we know it averages around 2.44 from the 19th of January. 85 to 15 win to loss ratio. Like I say, they didn't do enough trades yesterday. There's only 7 trades there. It's obviously more winners than losers. And we'll see what happens today, but a good start to the week nonetheless. Like I say, I was missing in the afternoon. And looking at the chart, it wasn't a bad thing, was it? Because the market was stuck in a bit of a sideways pattern there, but did move to the upside nonetheless after being sideways there at lunchtime. You can see the retracement back and then moving to the upside there. In the S&P, very similar picture. You've got the demand there as the market is oversold, expecting a bit of a bounce in this market along with the other stock markets. Same here, retracement there of 89% to the low of Friday. The market bouncing. Watch the DP. Market bouncing off the 50 EMA at the moment in the 30-minute chart of the S&P. In the FTSE 100, demand oversold, taking out yesterday's low for the obvious reasons that the pound obviously struggling a bit. But again, you can see them buying in just below the low. Got your demand there, the increase in volume, oversold, and then moving it to the upside there. Big jump there. I think there was a problem with the data there. That's too big of a jump otherwise. So ETX having a bit of a problem there. Back to Friday's low, becomes support, and the market bounces off it. Again, watch the DP close, and of course the low and high as the market makes its directions today. And finally in the metals, again, demand. We're not oversold, but we've pulled back. We're at 78% retracement. The market could move back to the upside, and I'll show you why in just a moment. We've got the 38 and all of the other fibs there. Again, 38 timing with the high and the 20 MA and the 5. So getting back above 18.90 and $19 an ounce. It'd be a bit difficult. Yesterday, you can see we moved up initially as the dollar moved lower, but then once the dollar started to move higher again, the metals market moving lower, and they're trading back up to the DP on the overnight. Meanwhile, gold also showing demand, starting to move back to the upside as well. So from here down to here, again, we've got a set of fibs there that we can use. Notice that the 5 is tying in with the 38% retracement there, and also the high of yesterday's bar as well. In the 30 minutes, again, you see exactly the same thing, holding, but finding resistance at the 50 bar moving average, and then falling out of bed yesterday. So up, back, and then you've got the new low for yesterday. And also through the DP, watch the 50 EMA as the market tries to move higher, and also the 1650 level. I think this is 16. Let's have a look now. 1635, isn't it? Yeah, 1635 level there for gold. Dollar. Yesterday moving back to the upside, a lot of supply there. This market's having a bit of a breather, which is going to take the pressure off the Bank of England and move back to the downside there a bit. So again, the 38 fib tying in with the 5 bar moving average there, but it looks like we're set for a bit of a breather for the dollar, which is going to take the pressure off Bailey and Co. and all that other nonsense about going to 6%. We'll have to wait and see, but I just don't see it. They would absolutely destroy the housing market. It really would. The people are used to paying low amounts, and if you actually go and have a read of this article, actually, if you just go back to it, it explains why, which is something I've spoken of for many years as well, about the double-edged sword of interest rates. But well worth the read. Well worth the read if you're interested to see why they're predicting 6% on interest rates. And this is the part here which is important. I'm not going to read it verbatim, but that was the bit that was really important. Okay, what else? Quick look at the gold-silver ratio, moving back to the downside, and economic news for today. What have we got? Powell out at 12:30 p.m, so the market may wait to see what he's got to say. We've got MPC, Phil speaks, Bullard is speaking, and what else have we got? We've got consumer confidence today and durable goods. That'll be interesting to see where that is as well. House price index also for the US at 2 p.m. So yeah, there's a bit of news out. Main event is going to be Powell at 12:30. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.